Okay, so you want to get up to speed on something important fast. That's what we're doing today.
Right. We're diving into the latest financials from Age Management Services Ltd, CAMS.
Exactly. CAMS, the big registrar and transfer agent RTA for Indian mutual funds, they handle, well, a ton of the essential back office stuff.
And we've got quite a bit to work with here. The official press release, their detailed results, standalone and consolidated.
The investor presentation, too, yeah.
Yeah.
Plus, a bit from their earnings call transcript and some really insightful questions people have been asking.
So the mission, if you will, is to pull out the key insights. What really matters from all this data?
Consider this your fast track to understanding CAMS performance, not just for Q4 of their fiscal 25, but for the whole year.
We'll break it down, give you a clear picture of what's going on financially.
Okay, let's start big picture. Overall performance, how did they do?
Well, full year FY25 consolidated revenue, up 25.2% compared to last year. Pretty strong.
That is strong. And Q4 specifically.
Q4 saw a 14.7% year-on-year increase. Now, remember, that Q4 number includes the impact of that price adjustment they'd flagged earlier.
Right, the price adjustment.
Yeah.
So even with that, seeing almost 15% growth, it suggests some real momentum underneath, doesn't it?
It really does. It shows the core business is chugging along nicely.
Right.
Now, profitability.
Yeah, how did that look?
Full year profit after tax, PAT, grew by a solid 33.0%.
Wow, 33%, okay.
And for Q4, PAT growth was 10.2%. The PAT margin for that quarter landed at 30.9%.
And EBITDA margin, that's always a key one.
Very healthy, 44.9% for Q4. That earnings before interest, taxes, depreciation, and amortization really shows strong operational efficiency.
Good numbers. And earnings per share, EPS, for the investors tracking that?
Basic EPS for Q4 FY25 was RS 23.08. That's just for the quarter, of course, not annualized.
Got it. And the full year?
Full year FY25, annualized basic EPS comes in at RS 95.41.
Okay, so solid top and bottom line growth. Now let's dig into their core, right? The mutual fund business. They're still the giant there.
Oh, absolutely. Market leaders. They hold about 68% market share based on assets under management, AUM.
68%. And how many fund houses, AMCs, are they working with?
They're servicing 26 out of the 51 AMCs currently operating.
Still the dominant player then. How's their AUM growth looking?
It mirrors the industry pretty closely, which is good. Up 24% year on year.
And what's driving that? Equity inflows still strong.
Very much so. Equity assets managed by CAMS grew 29% year on year. They crossed the 25 lakh crore mark. Quite impressive.
That's huge. What about SIPs? Systematic investment plans. Still popular.
Definitely. Live STs handled by CAMS grew 18% year on year, hitting 5.7 crore in Q4.
5.7 crore live SIPs. Wow. Any trends in new SIP registrations?
It's interesting. New registrations were kind of flat year on year in Q4 itself.
Oh, okay.
And this is key, for the full fiscal year 25, new SIP registrations jumped by a massive 51%.
51% for the full year. That's significant. Shows the underlying trend is still very positive.
Exactly. And here's another stat for you. CAMS handled 68% of all the money raised through new fund offers, NFOs, across the whole industry in FY25.
68% of NFO collections. That's quite something. Shows their reach with distributors and investors.
It really does. And speaking of investors, their unique investor base grew by 26% year on year.
Faster than the industry average, wasn't it?
Yeah, the industry grew about 22%. CAMS crossed the 4 crore unique investor mark.
4 crore investors served. And are they adding new fund house clients too?
They are. They onboarded Angel One MFs and Unify MF. That brings the total live AMCs they service to 21.
21 live now. Any more in the pipeline?
Yep, they mentioned expecting to take another 5 AMCs live within the next 6 months or so.
So still actively growing that core mutual fund client base. That's good to see.
Absolutely. It shows continued confidence in their platform. But, what's really catching my eye is their progress beyond mutual funds.
Ah, the diversification strategy. How's that playing out? Is it making a real difference to the numbers yet?
It is. Non-mutual fund revenue now accounts for 13.7% of their overall revenue.
13.7%. Okay, that's starting to be quite meaningful. So what's driving that? Let's break down those other businesses. CAMS.
CAMS is doing exceptionally well. Revenue growth in Q4 FY25 was 85% year on year.
85%?
Yeah. And for the full year, FY25 over FY24, it was a 64% increase.
Huge growth. Are they winning new clients?
They signed 19 new mandates. And interestingly, 15 of those were outside the mutual fund industry.
15 outside MF. That really shows the diversification is working, finding traction elsewhere.
Definitely. They also launched something called Bima SBA for insurance premium payments. Already have 3 insurers signed up.
Okay, payments for insurance. Makes sense.
And their UPI auto-pay transactions, up 25% just quarter on quarter. Plus, they saw a big jump in LIC account authentication services.
LIC, Life Insurance Corporation of India.
The very same. And CAMS Pay is now impaneled by LIC as a payment gateway. They also got authorized as a BBPOU, a Parat Bill Payment Operating Unit.
BBPOU. Right. That lets them handle a much wider range of bill payments, doesn't it?
Exactly. It opens up a much larger potential market for CAMS Pay. It's a significant development.
Okay, so CAMS Pay is firing on all cylinders.
Yeah.
What about CAMS alternatives for AIFs and wealth managers?
Another strong area. They had a great quarter, winning over 56 new mandates. That brings the total for FY25 to over 200.
200 mandates in the year. Their platform, WealthServe 360, seems popular.
Very much so. They call it the preferred digital platform, supporting over 200 clients now, managing over 2.50 lakh crore in assets under service.
2.5 lakh crore.
Yeah. And they're seeing good traction in Gift City, too, that international finance hub in Gujarat.
So, catering well to that alternative investment segment, that's another solid pillar for diversification.
It really is. It shows their tech is adaptable. Now, CAMS Rep, the insurance repository. Any news there?
Big news, actually. LIC India signed up with them for repository services.
LIC signed up. Wow, that is big. That should give them a serious boost, a real tailwind.
Definitely. They already have, what, over 40% market share?
Yep, over 40%. And over 11 million electronic policies stored. They keep adding about 1 million new e-policies every quarter, consistently.
1 million a quarter. And they mentioned Bima Central.
Right, 3 insurers are live with integrated services on Bima Central, their unified platform. Getting LIC on board is a major validation, though. Huge potential there.
Okay, so CAMS Pay, alternatives, CAMS Rep, all looking strong. What about CAMS KRA, the KYC agency?
Also had a good year. Revenue grew 31% in FY25. That's impressive, given they mentioned a challenging environment, especially towards the end of the year.
31% growth despite challenges. And they added clients.
Yes, 3 leading brokerage firms came on board in Q4. Shows resilience and appeal beyond just AMCs.
Okay, they're covering a lot of ground. Any other ventures? Fintuple.
Yes, Fintuple. They've made a move into the National Pension System, NPS,
NPS.
with a product called Nivruti. They actually won a mandate to build a back-office platform for a major pension fund's point-of-presence POPI business.
A POPI, the entity dealing directly with subscribers, right? So CAMS Tech is now powering parts of the NPS ecosystem, too.
Seems like it. It's another step in broadening their financial services footprint.
And finally, Think 360, the account aggregator and tech solutions arm.
Think 360 is really taking off. They launched a personal finance management product. It's being implemented for a major financial app, apparently.
Okay. How are their financials?
Revenue growth was, well, stunning. 92% in FY25 overall. Year-on-year growth was 32%.
92% for the year. Where's that coming from, mainly?
A lot seems to be from the account aggregator space. They highlighted significant market share gains there. They even won awards for their open banking solutions.
Account aggregator. That's a potentially huge market, isn't it? Facilitating data sharing.
Exactly. They noted it's much larger than the mutual fund market itself. Plus, Think 360 got recognized as a leading provider of generative AI services.
Gen AI now, too. They're really pushing the tech envelope.
Seems that way. Their investments in technology in these newer areas are clearly yielding results. Okay, so putting this all together, strong core MF business, rapidly growing non-MF businesses. What's the overall outlook? What are they saying about the future?
The commentary from the managing director was very positive, highlighted the strong FY25 and the promising outlook. We already mentioned the expectation of 5 more AMCs coming online soon.
Right. And the business model seems resilient, holding up margins even with those price adjustments.
Absolutely. Strong EBITDA margins demonstrate that. And growth continues despite market ups and downs, fueled by equity flows and those SIP numbers we talked about. Plus, the commitment to tech and diversification is clear.
Delving into that earnings call transcript, did they give any specific guidance for FY26?
They did mention expecting high double-digit growth, somewhere around 24–25%, specifically for the non-mutual fund revenue in FY26.
24–25% growth targeted for the non-MF side. That shows confidence. What about margins overall for next year?
They guided for an EBITDA margin of around 44% for FY26. That incorporates the sort of remaining impact from the price adjustments. 44% EBITDA margin guidance. Okay. They also talked about onboarding new agencies.
Yeah, 7 new agencies expected to be running within a year. They said it's too small right now to significantly impact margins, but it's good for long-term scaling.
Makes sense. Did they mention anything about recent costs or investments impacting the numbers?
They did. They highlighted significant investments in tech infrastructure, things like Oracle licenses, something called Sharplex, and crucially, a new air-gapped data center for security.
Air-gapped
Yeah,
for extra security, right?
exactly. These investments hit their depreciation costs in the current quarter, and they expect that level of depreciation to be the run rate going forward.
So higher depreciation baked in now due to necessary tech upgrades. Understandable. They also seem keen on the account aggregator space. You mentioned its size.
Yeah, they specifically mentioned focusing on more penetration in the DMAT and broking marketplace for the account aggregator business, noting again how much larger it is than the MF market opportunity.
So a clear strategic focus there. And one last point on CAMS Rep and LIC.
Right. They clarified that LIC is actually signing up with all 4 insurance repositories. However, CAMS still expects to get a significant chunk of LIC's new policies flowing through their system.
Okay, so not exclusive, but still a major opportunity given LIC's scale. That makes sense.
Definitely positions CAMS Rep for significant growth, even sharing the pie.
Now, shifting gears slightly, dividends for shareholders.
The board recommended a final dividend of Rs 19 per equity share. Of course, that's subject to shareholder approval at the AGM.
19 rupees, final dividend.
Okay. And any housekeeping items like auditors?
Yep, Ms. Ranga Rao and Co. were appointed as internal auditors for FY 2025-2026.
Okay.
And the board recommended Ms. B. Chandra and Associates as secretarial auditors for a 5-year term, starting FY 2025-2026, again pending shareholder approval. Both seem like experienced firms.
Standard governance procedures there? Anything on company policies? Just that the board approved updates or reaffirmations of several key policies. Code of conduct, diversity policy, nomination remuneration, insider trading, CSR policy, the usual important governance framework stuff.
Right, ensuring everything's up to date and compliant. Okay, so let's try and wrap this up. Key takeaways.
Well, first, strong overall financial performance in FY25, good revenue and profit growth.
Second, continued dominance in their core mutual fund RTA space. Market share is holding steady. AUM is growing.
Third, and maybe most importantly for the future story, is the significant traction and real growth momentum in those non-mutual fund businesses. CAMSPay, Alternatives, Canvas Rep, Think360, they're all contributing meaningfully now.
Driven by that clear diversification strategy and tech investment. And finally, the outlook seems pretty positive, right? Guided growth in non-MF, stable margins expected.
Exactly. So hopefully this deep dive gives you a really concise, useful understanding of CAM's current position and where they might be heading. All the key stuff, quickly.
Definitely. And as a final thought to leave you with, thinking about CAMS pushing into insurance, payments, account aggregation, this much broader scope beyond just mutual funds. What kind of maybe unforeseen opportunities or even new challenges could this wider reach present for CAMS and maybe even for the whole financial services landscape in India? Something to ponder. We do encourage you to check out the source documents if you want even more detail.